How does a house in the midst of olive groves sound? How about a cliffside getaway on the Mediterranean? You may want to consider making that purchase if it's always been your dream. It's a good time to buy that beautiful villa overseas.
I'm only half joking. If you're looking for foreign real estate or things like that, and have sort of a second home or vacation home, or you're nearing retirement and you're looking for maybe somewhere to relocate that you've always wanted to do but never had the time or the money to do it. I mean, those are the kinds of things that as the dollar gets stronger, you with dollars in your bank account or your investment account can go and buy on the cheap.
Yes, the value of the U.S. dollar is gaining strength and has parity with the euro. Mike Larson, editor of Safe Money Report, says that means global capital will be pouring into the dollar.
The easiest thing to keep in mind about currency values is when you have higher interest rates in one country versus lower interest rates in another, money is going to tend to gravitate towards the higher rate country. It's just how it works because people want yield. They want more yield earned on their cash. So when you have the U.S. Fed that is out there doing 50, 75 basis point hikes, and they're doing it every several weeks, and you have the ECB, which is only on the cusp of doing its first hike, and it's probably only going to be 25 basis points, and you have the Bank of Japan that's out there saying we never want to hike ever again and just keep rates at zero, you can see why money is coming out of the yen, money's coming out of the euro, and money's flowing into the dollars.
So if you're a U.S.-based investor, you want to focus on U.S.-based companies that earn most of their money in the U.S. You want to stay clear of funds that track foreign stocks or foreign bonds because of headwinds you'll be facing.
When the dollar is going up, it lessens the dollar value of the foreign bond you own or the foreign stock that your mutual fund owns, for example.
But consider the overall economic conditions. A recession in the U.S. might not be far off.
I think that it's probably going to happen by the tail end of this year or early next year. But, a recession more broadly isn't just 2 quarters of negative GDP. It's joblessness going up. It's office vacancies rising. There's a lot of other things that tend to go into it. There's some people out there that are saying, well, we might hit the technical definition of recession right now. In the first quarter of this year, we already had negative GDP growth. Some of the models out there that try and look at the data coming in and estimate what the second quarter is going to be are, in fact, spitting out negative numbers.
There are areas of the market that remain promising for investors.
If you focus on domestic companies, you tend to tilt your investments towards more defensive sectors. And I think that's the best strategy for an investor right now. Defensive kind of stuff that doesn't need a hugely powerful, strong economy to do very well, to generate revenue and earnings.
Defensive sectors like consumer staples and utilities. One food and beverage giant Mike recommends, General Mills, which has a juicy dividend yield of 2.7%.
We all think of General Mills as cereal, but they're involved in a ton of other food and beverage products.
It also meets certain safety criteria to get a Weiss rating of A, a signal to buy. Another name in the Safe Money Report model portfolio, major food, snack, and beverage company, Mondelez International. Mike says these types of stocks may not get all the attention, but they're the ones generating profits.
They may not knock your socks off. They may not be like the greatest, most exciting type company. Everybody wants to talk about EVs and things like that, but they're the ones that are making you money as an investor now. And they're the kinds of companies that are going to attract money in a rising dollar, weakened economy type environment like we have.
If you're a fan of ETFs, the biggest and most popular ETF in the consumer staples sector, the XLP. And in the utility sector, there's the XLU.
And then you can use the Weiss ratings to drill down within some of those ETFs and say, all right, which companies have the highest ratings, which have a little more yield.
Mike says, keep in mind,
an environment where Fed hiking is generally bad for stocks and some other assets. It's good for a few others out there like the dollar. As an investor, you've got to make sure you're positioned, in more of what's working and less of what isn't. When you have a rising dollar, it tends to hurt commodities, precious metals, miners. There was a real huge split between winners and losers in this environment.
Fortunately, it's clear what some of the emerging winners are. Senior analyst Mike Larson, it's always terrific to get your insights. Thank you so much for your time today.
Great. Thank you.